hope that my new intro is cool. I worked on it for a long time. I need to get back and practice on my bass and whatnot, but I'm just fiddling with these new pieces of equipment that I have from that I bought myself with the profits from my day trading project. So yeah, anyway, let me know what you think in the description. I can use whatever intro I've had in the past. Okay, so I said that I would check my double bottom on SPY for Jenga in the Discord, and I also told somebody else that I would look at AMC on the weekly chart. So I'm gonna go ahead and just pull those up and we'll get going right away. And holy cow, that is a candle of bullishness. Behold its glory. This is a weekly candlestick that is just so bullish. I would say that as bearish as this wick was, I'm gonna say as bullish as this candle is. Like, this is intense, especially when you're coming out of like a doji. Look at that. I mean, I'm gonna call that a doji. Like, let's be honest. This okay. So I'm just gonna interpret this weekly chart. So the price opened here in this week. It dropped and bounced. Okay, that's bullish, right? And we do have a hammer, which is bullish. Then the price opened and did it rally and then drop, or drop and then rally? It doesn't matter. It came back down. So there was overhead resistance right in here. So we can read how the close of this candle and the high of this candle are defining a trading range. Okay? So whatever direction comes after this doji is going to signal which way the breakout went in that trading range. And this is how I read candlestick patterns. So what happened is, we had this doji, the price opened and it dropped, and then it didn't fall. It didn't fall as low as that first candle. So it set a higher low, very bullish, and then it came up, and guess what? It closed above. It closed above this doji. That's telling me that this isn't just an upward breakout. This has bottom tested and has now bounced with mighty, mighty strength. And look at the implied volatility. It's going up. It's going up. That's so cool. I love this. This is exciting. Volume is pretty low, though. We've seen in the past higher volume events. Like this top was huge. And so I guess the question to ask is, how much volume do we need to really run? I mean, volume has been as high as, what was this? This was in January. So is that billion, 3.3 billion in the week? 3,346,759,147. So, and that was just to what? To $18? Okay, so how about June? What was June like? Okay, there's June. We had a couple of big weeks. This had 2 billion and this one had 2 billion. So this is like half as much volume, and the price ran so much further, right? Think about that. I think that's important. We might not need as much volume as we had in January and last June in order to make a spectacular run now in the present. So it's very possible that just being above that 30-period weekly average in volume is a huge bullish signal with this mighty hammer. So let's talk about hammers, right? So of course their theoretical performance is bullish reversal, and so is their tested performance, and that occurs 60% of the time. So it's 60% what Bulkowski calls near random, but let's be honest, if you had to bet on 60, you would bet on 60 way more than you'd bet on 40. Okay, that didn't make sense, Cap. It doesn't matter. Let's keep going. So hammer candlestick discussion. What's Bulkowski say? He says the hammer is a single line candle bar that appears in a downward price trend, and it signals reversal 60% of the time. That's not bad, but it's also not far from random. See, I told you he's going to say that. He says that everywhere, all the time. That's like a Bulkowski-ism. Once the candlestick appears and breaks out, the move is unexciting, ranking 65 out of 103, where one is best. But the hammer appears frequently, so if you blow one trade, you can always compound your losses. Jeez. If you project the height of the candle in the direction of the breakout, candle top for upward breakouts and candle bottom for downward ones, price meets the line 88% of the time, which is very good. The best average move occurs after a downward breakout in a bear market. Price drops an average of 4.12% after hammer, blah blah blah. That of course is blah 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 blah. Okay, so I liked that. He says that you just take the measure of the candle and apply it to the breakout price. And let's see here, if you project the height of the candle in the direction of the breakout. Oh, so we have to break out of this candle. Okay. The price meets the target 88% of the time. Huh. if you project the height of the candle in the direction of the breakout. So let's just get a little line going here, and hopefully my line's going to be just as tall as that candlestick is. He's saying if we get a breakout, there's an 88% chance that we're going to reach whatever's up here at 1868. Yeah, so on Friday on my Discord, I was telling people, like, yeah, I mean, in my mind, we could run to 18. That's what I was telling people. And, well, here you go. This hammer is now supporting that idea that a run to 18 next week is feasible. And personally, I don't see why not. This is a huge trend we're breaking. And I think if you draw it on the weekly scale, it looks even cleaner. Just pure bearish action, and then an attempted breakout, a failure. And this was the greed of the bears right here. If this were a top, you would say, holy top, we've wholly doubled topped. Well, we've wholly double bottomed, and this thing is moving. So run to 18 next week? Yeah, absolutely. I'm actually going to put money on that. I will put money on that. On Monday morning, I'll buy some calls. And of course, the price is probably going to drop on Monday because I buy calls, or we're just going to shoot up straight to 18 on Tuesday. I'm going to keep saying that. I hope it happens. That'd be wicked. So on the weekly time frame, it looks like the price has made a very clean breakout. You can see there's a couple of tails dipping down here. The low at this candle is 1340, and the low at this candle, of course, is 1290. So to have a close of this week at 1443, that's a significant close. And this rally has already begun, and we're confirming bullish patterns in here. This is a hard flip. This is a hard shot down, and this is a hard flip. This is nice. And you know what we see here? Do you know what this is? This is a vertical run down. And I was looking for this pattern on the daily time frame, and that's how I was able to call the bottom. If you watch my May 8th video, I pretty much perfectly call that. I think this is getting long, isn't it? It is. Vertical run down. Let's have a look at the vertical run down. Okay, so this is awesome, right? Price moves down in a steep drop for at least 4 sessions. There is minimal overlap from bar to bar, and that's the important thing, is that there's minimal overlap, okay? What's cool is that this pattern has really high probabilities of really good retraces. Like, there's a 46% chance of a full bounce. That's crazy, just a V bottom. And you pop right back up, and hey, it's like nothing happened at all. But, you know, on the daily, we obviously didn't see that. But this is nasty. There's a lot of nasty vertical runs down. Look, 1, 2, 3, 4. We have the 4 candles right here, and there's no overlap between those candle bodies. I mean, yeah, the wicks and tails, sure. And then that last fifth, that 4th candle, it's super tall. It's so much taller than the prior weeks. And Wilkowski actually says on here that last bar probably signals at the end of the run. So that was definitely the case there. Wow, it's just amazing, just bullish stuff. So there's a good chance that we get actually a full retrace, a 46% chance that we come to the top of the vertical rundown, and that would put us at 1892. Hey, there's another $18 price target for you. That's probably what I'm going to be trading for next week, is $18. I think we're going to see lows in the mid to low 12 range with highs towards 18, possibly peaking around 20. Chance of Moaz is light with partly cloudy skies, and that's what it feels like at this point. Okay, so I'm already at 7 minutes. I want to go check SPY. So let's go check SPY really quick. That was AMC on the weekly. I'm going to turn my, okay, 1 year, 1 day. Here we go. So Jenga was saying that I did this wrong. Let me just go check the Discord really quick. What were you saying? I think it was in my my channel, right? Yeah, so Cap, point A is at 408.57, B is at 385.15. So the difference I should have used was 17, and the target should have been 425, which is the perfect level for a partial rise. Oh no, and partial rise. Yeah, okay, I'll talk about that. Let's do that. And this was an Adam and Adam double bottom. So I'm going to go ahead and just go over to Adam and Adam double bottoms. Do I have that? I don't. Okay, yeah, here we go. Adam and Adam double bottoms. Okay, so let's go to the measure rule. That's what we're talking about, is how I measured this and how I might have done it wrong. He says, compute the height from the highest peak to the lowest valley in the pattern, and then multiply by the percentage median price target. Very normal. Add the result to the breakout price, the highest peak. Ah, the highest peak. I probably did it into the confirmation line like I would in an Eve double bottom. That's interesting. Have I always done that wrong? I wonder. I wonder how that works. I'll have to look at those double bottoms more. There must be some variety, as they do form different patterns, I guess. The even, Adam and Eve, and blah 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 blah. So okay, we're gonna do this again. I'm gonna pull up my calculator really quickly. I'm gonna get up here. Okay, that's what it feels like. I have to drag it across the screens. What over here? A little more. So we start the high. I'm gonna start the high from here. I'm gonna say 429.66. 429.66. And is that what Jenga was saying? No, Jenga was saying 408. 408. Why 408 though? See, 408 isn't the. See, that's this intermediate high. And that's not what I'm talking about. You want to compute the height from the highest peak A. Oh. To the lowest valley. Interesting, because he's not using the top of that, is he? Curious. So let's go at this example. He says the figure shows an example of an atom and atom double bottom chart pattern. The two atom bottoms are pointed, needless, with a good rise between them, point B, and they appear after a downward price trend. The atom and atom double bottom confirms as valid when chart pattern closes above point B, shown as the horizontal blue line, of course. To calculate the price target, subtract the price of the lower of the two atom values from the price at peak B. And that's what I did wrong. Okay, so my target was too high because I measured from the wrong spot. I'm supposed to be using this high. Okay, see, this is great. This is why I love having people watch me, is because you can catch my mistakes. Like, I'm not perfect. I make mistakes all the time. Okay, high 408.57. 408.57 minus that low of 380.54. And whoops, 380.54. What? 380 decimal 54. Okay, and is that the same price you were using, Jenga? 385.15. Why 385.15 though? That's curious. I'm not sure why 385.15. And it says subtract the price of the lower of the two atom values from the price at the peak, which is this. So okay, I'm just gonna keep going here. From the low of 380.54. And then our percentage, meaning price target, is 73. So we're going to multiply that by 73. And that equals, whoops. Oh, man. I'm stoned, aren't I? That's okay. We'll figure it out here. 408.57 minus 380.54 equals that by 0.73. Should be a normal number. Thank you. And then we add it to, he says, the highest peak. Is that correct? Let's just go down to the example here to get multiply it by 71. Okay, that's different from his percentage mean price target. Okay, whatever. Add result to B, and then he adds it to B. 408.57. 408.57. What do I get? 429. 03. I think that's near my target still. Oh, it's much lower. So I was thinking the target was up here, but actually it's gonna be a bit lower. There we go. Right. Okay, so this is the right double bottom target. It's lower than I thought. Wow. Thank you, Jenga, for bringing that up. I like that. Okay, so if the price target's met and then nothing happens, right? That wouldn't be great. That would be a partial rise. And maybe there's even a bigger double bottom to carve out. Oh, can you imagine? This comes up, hits here. We have a few good days. AMC hits 25 and then turns around as the markets keel back over. And then there's immense fear of a bear market as a bigger double bottom is carved. That's possible, right? So, you know, yeah, I can see it taking longer than I want. Okay, that would make sense to me. Now, this is assuming that we don't enter into the worst bear market that I think I've ever seen in my life, and I lived through 2008. I think the next one could be like that, but worse, but better in some ways, because it won't be like an impending crisis where there's like banks eating up other banks because there's not enough liquidity. It won't be like that, not like 2008. These things are all distinct, and you don't know exactly how they're gonna go, right? That's just life. Okay, so yeah. That's what I have, I guess. My SPY target was wrong. It is lower than I thought, and there is going to be an opportunity here for either a handle, and we have some sort of double bottom with a handle and a huge breakout, or maybe we form out a bigger double bottom. Who is to know? My money's on this right here, because this would lead to a lot of FOMO in the meme stocks, and then they would all turn around at once, and everyone would get wrecked because they're all YOLOing in the calls. So this is probably a pretty good bet. Okay, that's what I have for today. I'll try to post something tomorrow. I really don't think though that I'll be available to do so. Let me know what you think of my new intro. I'm kind of hit or miss because there's some delay in the video and the sound, but I don't know, maybe I'll figure it out. Happy trading.